Good morning, my dear friends. So, the one and only pending chapter in our wing is accounting for liquidation of companies. So, in the last few lectures, we completed the chapter amalgamation and we have done with internal reconstruction as well. Most of the problems I covered, and if time permits at any point of time, I'll try to cover one problem which is there in RTP. So, which is actually a different problem we are unable to cover due to lack of time. But meanwhile, I'll try to cover that. Still, we have 3 more lectures, including this lecture. Okay, so this is a first lecture. That's why I don't want to deviate with that problem. Let me quick start this chapter, liquidation of companies. Guys, please all of you concentrate approximately for 30 to 45 minutes. We are exclusively dealing the theory, which creates base for understanding of all other concepts. So first of all, I'm asking a quick question, all of you. What is the difference between the word liquidation and the word winding up? Is it both are same? Is there any difference? Please, all of you give your quick answers through the query box. Is there any difference between liquidation and winding up? Both are same or both are using synonymously? There is no difference. Yeah, still I am waiting. I not yet received any single answer. Winding up is voluntary. Oh, someone is telling, sir, there is no difference. Okay. What else for others, guys? Friends, most of the times we are using the word liquidation and winding up simultaneously or synonymously. And as per the Companies Act 2013, or as per any other regulators, or as per any other acts, the words, they are also considered synonymously. So liquidation will replace the word winding up, and winding up the word will replace the liquidation. But conceptually, there is a difference between liquidation and winding up. Yeah, I got some more answer. Just liquidation is the result and winding up is the process. Liquidation is the process, winding up is an act. Yeah, Jyoti, you are correct, ma. Jyoti, what you said was correct. Exactly. Sir, liquidation, it is a process of closure of the company. Winding up is an order, or we can call it as event. Sir, what is the difference between process and the winding up, sir? Just a moment. Once the company decided to close their business, the company should need to appoint the liquidator. In detail discussion will be there in further. So once the liquidator appointed, what liquidator will do? He will realize all the assets. He will settle all the liabilities. Now, for the realization of assets and for settlement of liabilities, it will take so much of time. How much time it will take, sir? If you consider a joint stock company like Reliance Industries Limited, or like a Tata Group, or like a Birla Group, or any other big limited companies, if you can consider, then huge worth of assets and a lot of liabilities exist. So to identify the assets and identify the liabilities itself, it took a lot of time. That's why don't expect that realization of assets and settlement of liabilities is going to happen within a day. It will run over months. It will run over years, depending upon their nature of the assets, their nature of the business. That means this procedure, after appointment of the liquidator, the realization and the settlement process is going to occur over number of years. Now this entire process is technically known as liquidation. Now after completion of everything, so the court will pass the winding up order. The court will pass the winding up order. Once court will pass the winding up order, then the company name is going to struck off. Company name is going to struck off from the database of MCA. From the database of MCA. Once the company struck off, then no one can file any suit on the company. No one can argue anything on the company. So the event which was, that is, passing of an winding up order by the court, which is technically known as the winding up order. So that means literally there is a difference between liquidation and the winding up. Liquidation is the procedure conducted by the liquidator to get the winding up order. Winding up is an ultimate conclusive event for the liquidation procedure till now what liquidator was adopted. Do you understand? I can tell you in this mode as well. Liquidation is the starting point. Winding up is the ending point. Am I right? But you know, in Companies Act 2013, they provided the definition of winding up is, in Companies Act 2013 only I am talking. What is the definition of winding up, sir? I'll directly open my material. Then you have better idea. What is the definition of winding up they given, you know? As per section 2 subsection 94A of the Companies Act 2013, winding up means winding up order in this act or liquidation under the Insolvency and Bankruptcy Code 2016 as applicable. So just related to acts and other things, just ignore for the time being. What they're telling, winding up means winding up order or liquidation. So that is the thing I told you earlier. So in the act, they are using synonymously. There is no difference between winding up and liquidation. But literally, hope you understand the difference between liquidation and the winding up. Here, the scope of the chapter liquidation of companies earlier means as when I acted as student, the scope is completely within the hands of the Companies Act 2013. But you know, the society is too dynamic and the business people is also conducting their business activities in too much of dynamic nature. So that's why regarding the liquidation or regarding the winding up of the company right now completely evolved in two different hands. I mean, so the winding up, so it includes liquidation as well. Whenever I'm talking about winding up, it includes liquidation. I don't want to differentiate. So always synonymously we are using, but the literal meaning, you know the difference. Whenever a company decided to go for winding up, there is a two possibilities. That is it compulsory winding up, sir? Is it compulsory winding up? Or is it voluntary winding up? Sir, compulsory winding up means the company is willing to continue their business activities, but the regulators will not agree for that. Then the courts may order for compulsory winding up. Now, such compulsory winding up can also going to happen in two different situations. One is through inability to pay debts, inability to pay debts of the company. In other situations, simply. In case of voluntary winding up, so before 31st March 2017, that is before 31st March 2017 and after 31st March 2017. What is the significance of this date, sir? Let us discuss all such things first. Sir, whenever there is a compulsory winding up due to inability to pay debts, That means simply company became insolvent. The company assets are not enough to repay amount to the liability holders. They are unable to satisfy all the liability holders. I'm not talking about preference and equity shareholders. Outside liability holders itself, they are unable to satisfy. Then we can simply say that company became insolvent. That is due to inability to pay debts, company went for winding up. For example, company first, due to their existing huge continuous losses, it went for internal reconstruction, let us assume. After completion of internal reconstruction also, company unable to change their internal structure. So still the losses are continuing and huge unrepresented assets are again accumulated. Then definitely the last option available for the company will be the winding up. At that point of time, the company went for the compulsory winding up due to inability to pay debts. Do you understand? Now, is it Companies Act 2013 is applicable in that particular situation, sir? No. Companies Act 2013 doesn't applicable. Then at that scenario, insolvency and bankruptcy code will be applicable. That is simply IBC, Insolvency and Bankruptcy Code 2016 regulations are applicable. Companies Act 2013 doesn't applicable. In other situations are there, right? In other situations, NCLT, National Company Law Tribunal, may order for compulsory winding up. What are such situations? We will look into that at later point of time. Next, coming for voluntary winding up, those companies which initiated the voluntary winding up before 31st March 2017, for which Companies Act 2013 provisions are applicable. For all the companies which initiated the voluntary liquidation or the voluntary winding up after 31st March 2017, again for which insolvency and bankruptcy code voluntary regulations are applicable. That is nothing but again IBC code is applicable. In such IBC code, voluntary regulations are applicable. Here IBC other regulations are applicable. That is insolvency regulations are applicable. Here IBC voluntary regulations are applicable. For both the things, only insolvency and bankruptcy code only applicable. Do you understand, all of you? Sir, before seeing such all things, first of all, what is this insolvency and bankruptcy code, sir? Because we know something related to Companies Act 2013. That's okay, fine. Then what is this insolvency and bankruptcy board, sir, actually? Okay, you already listened such thing in your Companies Act 2013 in your group 1 or somewhere. But anyway, just let us have a look quickly. What is this insolvency and bankruptcy board? Okay. So come here, all of you. This is Insolvency and Bankruptcy Board of India. If you check, I'll open About Us. If I open this, then you can understand everything. So just I'm highlighting the important things. I don't want to read the entire thing here. So the Insolvency and Bankruptcy Board of India was established on 1st October 2016 under the Insolvency and Bankruptcy Code 2016 code. It is a key pillar of the ecosystem responsible for implementation of the code that consolidates and amends the laws relating to reorganization and insolvency resolution of corporate persons, that is related to companies, not only companies, partnership firms and individuals in a time-bound manner for maximization of the value of the assets of such persons to promote the entrepreneurship, availability of the credit and the balance the interest of all the stakeholders. Simply what it tells from these lines, IBC code was established by the government of India, that is, which is nothing but board, for the purpose of best interest of the stakeholders of the corporate persons and as well as partnership firms as well as individuals. Next, one more thing. What is that? It is a unique regulator which regulates a profession as well as process. It has regulatory oversight over the insolvency professionals. Who is this insolvency professionals? Insolvency professional agencies, insolvency professional entities, and information utilities. I mean to say, as per the Companies Act 2013, the liquidator may be appointed by the shareholders or the liquidator may be appointed by the debenture holders, or sometimes the liquidator may be appointed by the NCLT. So as it's completely based upon the situation in which the liquidator is going to be appointed. But once the liquidator appointed, no one will have control on such a liquidator. I mean, no one will regulate the liquidator what he is actually doing inside the company. Ultimately, once the liquidator appointed, he will realize the assets, he will repay the liabilities, he will submit one report to the court. That's it. But here the insolvency professionals means the professional who is appointed under insolvency bankruptcy board will be controlled by this IBBI, Insolvency and Bankruptcy Board of India. That means these liquidators are again controlled. What they're actually doing is they should need to ultimately submit certain reports to the board themselves. And one more thing, these insolvency professionals are also appointed by whom? Insolvency and Bankruptcy Board of India. That means what I can conclude, lot more regulations coming into the picture due to Insolvency and Bankruptcy Board of India. That too, Companies Act 2013 doesn't have those many various provisions. Sir, if it is due to insolvency, you should need to adopt liquidation in that way, in that mode. If it is due to other than insolvency, you should need to adopt this procedure. Like that, various provisions are not available in the Companies Act 2013. Why there is a necessity to involvement of Insolvency and Bankruptcy Board of India, you know? Whenever company went into the liquidation due to the insolvency, then we don't know whether for all the stakeholders justice was happened internally or not, because a lot of public money is involving at that point of time, and certain persons may not get any money from the company. So that's why we should need to conduct the entire liquidation procedure in the transparent manner. So to adopt the transparency, this IBBI coming into the picture. So here board is there. Okay, certain chairperson and some all other persons are also there. Members are there. If you want, you can also act as a that is insolvency professional. But provided that before that you should need to qualify certain examinations. Yes, chartered accountants are also qualified persons. If you check this here, certain examination will be there. Please check here. Limited insolvency examination. Those persons who qualified these exams, they can appointed as a insolvency professionals. Okay, the entire system was completely built up by the government of India. Let it be, just leave it, come back. Sir, now my question is, here we are learning this chapter in IBC point of view, na, in Companies Act 2013 point of view, na, in both the angles, na, regarding learning provisions. Regarding the legal provisions. The legal provisions, just we are come crossing IBC code as well. Just we are come crossing, but we never conducted the liquidation procedure as per IBC. So the procedure what we are learning throughout the chapter is as per Companies Act 2013 only. But what really happened, if IBC code is applicable, just we will come across certain provisions. That is up to learning the provisions only. But the procedure or the problematic issues, whatever the thing we are doing throughout the problem, we are conducting this chapter based on the Companies Act 2013 itself. Okay, let it be. All of you please come back to my PDF. Guys, are you with me? Janesh, sir, it means there is no part to Companies Act now for winding up. No, I didn't say like that, na. So the situation, depending upon the situation, if it is the voluntary, nowhere control in the Companies Act 2013. If it is compulsory winding up due to insolvency of the company, again, not within the scope of Companies Act 2013. Now the purview of the Companies Act 2013 is very small, which is in other situation. That situations only now I am explaining. Okay, then NCLT will coming into the picture. Now I will tell such situations. Just a moment. Sir, in which situation the NCLT may order for compulsory winding up, sir? The situations were clearly given in Companies Act 2013. What are such situations? Let us have a look quickly, guys, all of you. If company affairs against the sovereignty and integrity of the country. So sovereignty and integrity of the country means, for example, we are exporters to Pakistan. Let us assume there is a war declared in between Pakistan and India, or sometimes at that point of time, there is a internal war happened at the lines, border lines of India and China. Okay, that internal war, not really the declared war. At that point of time also, Indian government banned so many products regarding the exports to China. For example, you are involving in that export business. You are exporting certain goods to the China, let us assume at that point of time. Now the company affairs are against the sovereignty and integrity of the country. Then the NCLT may order for compulsory winding up. Then the liquidation procedure should need to be adopted as per the Companies Act 2013. And the company affairs are fraudulent manner. The company was established only to deceive the public. Just they loot the money from the public. They just incorporated so many suitcase companies. They never conducted any business activities, or if at all they conducted certain business activities, just their intention is they are conducting certain malpractices and they are taking money from the public, just they are going for the winding up. If that is their intention, then again the NCLT may order for the compulsory winding up. In that particular scenario, so who will provide a petition to the NCLT, sir? The ROC. If ROC finds that the company affairs are fraudulent manner, then ROC will make a petition to the NCLT or the representative of the central government. So any of the central government representative also, they can make a petition at that point of time. And the company defaulted filing their annual returns and the financial statements continuously for a period of 5 years. Do you know the meaning of annual return and financial statements, guys? Sir, as per the Companies Act 2013, as per Companies Act 2013, what happened? Once the company prepare the financial statements, it is whose responsibility to prepare the financial statements? It is the responsibility of the board of directors. Actually, board of directors will delegate that authority to finance department. Who is the head of the finance department? CFO. So CFO and their team will ultimately prepare the financial statements. Then such financial statements will go to the board of directors, because those guys are only responsible. They will conduct a board meeting and they will approve the financial statements. After approval, they will also propose the dividend in such board meetings. They'll also discuss some other matters, that is directors' responsibility statement. They will release what are our responsibilities. So which activities we are going to conduct in the future, what are all our future projects. They will also something discuss about the financial statement for the purpose of proposal of dividend, all other stuff. Once the financial statements approved by the board of directors, then it should be make it signed by the auditor. He will also release the audit report. Now, the audited financial statements along with the audit report should need to send to the shareholders. How it is need to send to the shareholders? Now the company will issue an annual report. Annual report. In that annual report, it comprises board of directors report, audit report, financial statements, and all other related matters. Along with that, notice to invitation to the general meeting. So as per the notice given under the annual report, they will clearly tell as on which date the AGM is going to be conducted and what are the issues we are going to discuss, what are the general business activities, what are the special business activities. After this, what happened? Annual general meeting was conducted. AGM was conducted as on a specific date. After completion of AGM, still the story is not over. Now, within 30 days of completion of AGM, each and every company should need to file financial statements with the ROC, Register of Companies. After completion of AGM, within 60 days, the company should need to file a form. Here, within 30 days, they should need to file financial statements in the form AOC4. So within 60 days, the company should need to file annual return, the form MGT7 or MGT7A. Now, This is related to the financial statements. This is related to the annual return. If the company was unable to file these financial statements and annual returns continuously for a period of 5 years, then the NCLT may order for compulsory winding up. That point he is indirectly conveying. Do you understand, all of you? 1 second, guys, just for your understanding. I'm opening MCA website. So this is Ministry of Corporate Affairs website. If you check, so company forms download, just I'm going here, various forms related to company are available. First I'm checking AOC 4. So which is AOC 4? Just come down, read this, all of you. Form for filing financial statements and other documents with the registrar. This is form AOC 4, which was highlighted. Next, if you come for MGT 7 or 7A. So form for filing annual return by a company, MGT 7 and MGT 7A for small and one-person companies. Form for filing annual return by OPCs and a small company. So these forms, each and every company should need to file these returns and they should need to send it to the ROC. How they are in generally sending, you know, here, just a moment. Here my workspace is there, right? For every chartered accountant, there will be certain credentials. Okay, these are my credentials actually. After opening this form, actually one uploaded wing will come actually. Just if you make it click that, then the respective file folder, it will be uploaded. So like this, each and every form we should need to upload. The forms we should need to download it in the manually. We should need to file each and everything. We should need to complete the forms and we should need to upload here. Like this, each and every company will upload the respective forms. Let it be. I don't want to go into the deeper mode. If I go somewhere, then I'll explain something. Okay, come back, guys. Yeah, in other situations, NCLT can also go suo motu for the compulsory winding up. When NCLT can act suo motu, if it feels that it is justifiable on equitable basis, rather than continuation of the company, if it is better to close, if you feel, NCLT feels, then it will order suo motu. Then a company can pass a special resolution. Then NCLT can go for compulsory winding up. Maybe certain actions are going into the wrong direction, then the company shareholders may pass the special resolution. Then at that point of time, NCLT may order for the compulsory winding up. In these 5 situations, the company can went for compulsory winding up through order made by the NCLT. And when compulsory winding up situation, IBC rules are applicable if the company became insolvent. Do you understand? So related to voluntary winding up, right now entire scope is within the hands of the IBBI only. That is Insolvency and Bankruptcy Board of India only. Fine. Now, sir, just for the timing, as I already told you, we are not dealing anything based on the IBBI board. Just we should come acrossing certain regulations of IBC Code 2016. That too, we are going to see the voluntary rules and regulations right now. I mean, legally, if a company went for voluntary liquidation, then how the IBC rules and regulations are going to apply. Now let us have a quick look, all of you. IBC Code voluntary regulations. Okay. Now, one thing, guys, just come here. Sir, whenever a company want to go for voluntary liquidation, the first and foremost question coming into my mind is it the company is solvent or insolvent? Why I'm asking this question? If the company is insolvent, then voluntary regulations doesn't applicable. Then which regulations are applicable? IBC compulsory winding up regulations are applicable. First, if a company want to go for voluntary liquidation as per IBC code 2016, first the company should need to prove the solvency. The company should need to prove solvency. Sir, how a company can prove the solvency? To prove the solvency of the company, the majority of the directors means, for example, greater than 50% of the directors simply. They should need to provide a declaration along with affidavit. Affidavit should be in the prescribed form and it should be ultimately attested by the lawyer actually. That means the notary should need to be happened. The declaration along with an affidavit. In that affidavit, they should need to clearly prescribe that in our organization, there are no creditors, or creditors exist, but the company is able to pay the debts out of the proceeds through sale of assets. If they provide such a declaration along with affidavit, and they should also need to attach the last 2 years audited financial statements along with operations of the business and the valuation of assets and liabilities by the registered valuer. Then the company can go for the voluntary liquidation as per IBC code 2016. Why this much of complaints actually attached here, Sir, who will know the position of the company better, sir? Shareholders will not know anything. Only directors will know. Maybe in the balance sheet, the figures are showing in very good manner. I mean to say the assets worth is completely available to repay the liabilities. But if you go to the real market situation, the assets may not contribute much to the liabilities. That position may also arise. That's why they're also asking that apart from the audited financials, valuation of assets and liabilities by the registered valuer. Who is this registered valuer, sir? Sir, registered valuer means the persons who qualified the valuation exam conducted by their respective regulator. Even our ICA is also one of the regulator who conducted the registered valuation exam. Just a second. I'll show that. Registered valuer as per ICAI. So if you check here, ICAI registered valuers organization is there. So certain upcoming batches are also there. These all are post qualification courses, guys, actually. Okay. So something ICAI registered valuer organization itself is there. So governing board is there. So here they are also going to conduct certain examinations, certain batches, okay, courses. So eligibility criteria, free structure, syllabus, upcoming batches, everything is there. Now those members who qualified the examinations conducted by the ICAI, they can also act as registered valuer. Now our chartered accountants will provide that service to the company through a registered valuer certificate. Based upon that certification, if the IBBA, Insolvency and Bankruptcy Board of India, feels that the assets are sufficient to repay the liabilities, then it may make an order for you can proceed for voluntary liquidation. Now, after proving this solvency, within 4 weeks, the entire procedure should need to be approved by the shareholders, because without approval of the shareholders, no one company can go for liquidation, right? That's why within 4 days, it should need to be approved by the shareholders by passing a special resolution. Sir, if any of the creditors are impacted due to such liquidation, then 2/3 of the creditors should also give the approval. We can assume that liquidation procedure was started from that day. From that day means the date as on which is approved by the shareholders as well as creditors. Then we can assume that this is the cutoff date for the liquidation. Liquidation process was initiated. Then after approval, within 7 days, voluntary liquidation procedure initiated. Initiated means the entire procedure what we are going to conduct, we should need to send to the ROC as well as board. Here, what is the meaning of board? Board means Insolvency and Bankruptcy Board of India. We should also need pass on that information to the ROC as well as IBBI. Then IBBI will appoint liquidation professional. Just now we read that is insolvency professional. Just for understanding purpose, I wrote the liquidation professional, but the actual word is insolvency professional. They will appoint one of the insolvency professional. You may ask one question, sir, why you pass on the information to the ROC? Only it is within the purview of the board only, na? No, for ROC also they should need to know that information, because ultimately who will struck off that company name from the database of the Ministry of Corporate Affairs? ROC only. So that's why the information you should need to pass on to the ROC as well. But the liquidator professional or insolvency professional is ultimately appointed by board itself. Now, once the liquidator appointed, liquidation procedure he initiated. What he will do? He will realize all the assets. He will make repayment to the different liability holders in the particular order. Once the liquidation procedure is over, liquidator will submit a final copy to the adjudicating authority. Sir, who is adjudicating authority? What is the meaning of adjudicating authority? Adjudicating authority means different levels which might they present in the insolvency and bankruptcy board. For example, if you come to the Companies Act 2013, or as per the Companies Act, different adjudicating authorities are there. ROC in one adjudicating authority, regional directors is another adjudicating authority, NCLT is one adjudicating authority, NCLAT, so High Court, Supreme Court. So these all are different adjudicating authorities. Adjudicating authority means some level. They are having certain responsibilities as well as certain powers. So just that final copy they should need to submit to the court as per IBBA. Let us assume for the time being. Now, after receiving that final copy, then insolvency and bankruptcy board will pass a winding up order. And the winding up order, it will be sent to the ROC within 40 days to struck off the company from the database. Why to the ROC they should need to send? Ultimately, ROC will send that company name from the database of the MCAA. Like this, insolvency and bankruptcy board will conduct the liquidation procedure when voluntary liquidation is adopted. Do you understand the procedural aspects? I don't want to give much more information regarding this because it is nowhere impacted our problems, but you should need to know how the liquidation procedure in generally conducted by insolvency and bankruptcy board whenever voluntary liquidation is adopted. And one more thing, guys, regarding the legal provisions, compulsory winding up, in our syllabus they're not yet initiated. I mean, how for the voluntary winding up, IBC voluntary rules, how it is apply, just now we read. Similarly, how in case of compulsory winding up by the IBC regulations, they are not provided. They are not throwing any light here. That's why I don't want to discuss anything. Now, our main focus is, sir, if at all winding up was occurred within the purview of Companies Act 2013, then how the procedure is going to occur. Now let us discuss, guys. All of you please concentrate. This is highly useful for us for conducting our problems, for doing our problems. Compulsory winding up due to NCLT order. Due to NCLT order, in which situation the NCLT can go for compulsory winding up, we already seen. That is, the company affairs are against the sovereignty and integrity of the company, and company affairs are fraudulent in manner which was established to deceive the existing public. The company is defaulted, they're filing annual returns as well as financial statements for a continuous period of 5 years. Okay, so next, we already seen that it is a justifiable and equitable basis, then NCLT can go for sumoto basis. Like that, certain situations we already explained. If that is the case, then Companies Act 2013 provisions are applicable. Then Companies Act 2013 provisions are applicable. First, when NCLT can go for an order, NCLT can go for an order sumoto basis, or if any one person make a petition to the NCLT. So generally, a petition may be developed or a petition may be sent to the NCLT by the various parties like ROC or the representative of the central government, or it may be by the shareholders, or it may be by the creditors. Okay. So just they will send a petition to the NCLT. At the time of sending the petition, they should also need to attach statement of affairs to the NCLT. Sir, what is this statement of affairs? Please all of you concentrate. Now, as per the Companies Act 2013, what we are doing, so the respective party will make a petition. petition to NCLT, right? Now, along with the petition, they're also attaching statement of affairs. Sir, what is this statement of affairs? Statement of affairs is a statement prepared by the board of directors. Prepared by board of directors. Now, this statement of affairs contains all the estimated realizable value of assets. Estimated realizable value of assets. Estimated liability, estimated liabilities simply. What are all estimated realizable value of assets? What are all different estimated liabilities? Now, net surplus or deficit in point of view of equity shareholders, how much? Sir, why this statement of affairs should need to attach along with the petition, sir? First of all, NCLT here ultimately going to decide whether liquidation is necessary or not, and on which basis we should need to pass a winding up order. And liquidator will also going to be appointed at that point of time by the NCLT, right? At the time of appointment of liquidator by NCLT, first of all, NCLT should need to aware whether it is feasible to go for liquidation or not, and what are all different assets and liabilities we have. And ultimately, NCLT will hand over this statement of affairs to the liquidator. Liquidator is altogether an outside person. He don't know anything inside the company. And moreover, he is not interested party in the company as well. So that's why to identify all those assets, to identify all those liabilities, and to create a benchmark value for those assets and liabilities, at least he should know what are the estimated realizable values in the outside market, what are the estimated amounts of the liabilities. He should need to aware before conducting the liquidation procedure. For that purpose, board of directors will prepare, because who is the well-known person about the company affairs? Board of directors. That's why board of directors will prepare such statement of affairs and will ultimately hand over to the NCLT. Actually, now the NCLT will hand over such statement of affairs to the liquidator at the time of appointment. Now, once liquidator appointed, board of directors will lose all their duties and rights. Board of directors will lose all their duties and rights. All their duties and rights means, sir, now managing director can make a decision regarding the business activity? No. Board of directors will completely vacate their office and will come from their office. And right now, the board of directors place will be replaced by the liquidator. Liquidator will take each and every decision. Sir, how much production can I need to conduct as on the current day? Liquidator will decide. Which assets can we use, sir? Which assets can I sell at the initial stage, sir? Which assets can I sell at later stage, sir? Every decision will be taken over by the liquidator. And one more thing, guys, once liquidator will be appointed means gates will not shut down. Production will not shut down. Everything is going to continue, because here certain salaried employees are working. Certain suppliers, they already supplied the material. Do you understand? So that's why as on a single date, the production was not stopped. The production is going to be continued, but the entire affairs are now within the hands of liquidator. Now liquidator is the captain of the company. Now shareholders also lose their entire rights. Now shareholders cannot participate in the general meetings. They cannot influence the decision making process. Do you understand? There are no special resolutions. There are no ordinary resolutions. Now the entire affairs are within the hands of the liquidator. That's why shareholders are technically known as contributories. Shareholders are technically known as contributories. Now shareholders will not call it as a shareholders. We can call it as a contributories. Okay, sir, we understand. Now the liquidator was appointed. Liquidator will hand over everything. Liquidator will manage everything. He is conducting the duties of board of directors. He is conducting the duties of shareholders as well at that point of time. We understood. Now, what liquidator will do, once he initiated the liquidation procedure, he will start preparing summary of assets and liabilities, what he was realized and what he was ultimately settled, through a statement called liquidator final statement. Liquidator final statement. Now, liquidator should need to submit to the adjudicating authority, that is NCLT. Who appointed liquidator? NCLT. Every year financial statements plus this liquidator final statement as well. This financial statements plus liquidator final statement as well, he should need to submit. In liquidator final statement, what liquidator will represent? What are all different assets he realized till date? What are all different liabilities he repaid? Do you understand? It is a simply receipts and payments account, just which is resembles receipts and payments account. And as on that date, what is the status of the financial statements? Along with the financial statements, he is going to prepare the liquidator final statement. Once the entire procedure was over, he finally prepare another liquidator final statement. So this is periodical liquidator final statement actually. This is the final liquidator final statement. Final liquidator final statement will contain all the receipts after appointment of the liquidator, all the payments he made till now. Just he will make it present as a final liquidator final statement. In the problems, they are not asking the periodical liquidator final statement. They are asking to prepare the final liquidator final statement only. Whenever they are talking about liquidator final statement means which is a final liquidator final statement which contains all the assets what liquidator will realize, all the liabilities what liquidator actually keep paid. Do you understand? Now, after checking the liquidator final statement, then NCLT may order for winding up, or NCLT may pass a winding up order. At that point of time, if NCLT wants any clarification, they can ask from the liquidator. If they're really satisfied, then they can go for the winding up order. Then ultimately the winding up order, again NCLT should need to send to the ROC. Then ROC will struck off the company name from the database of MCA. Like that, the company liquidation procedure was adopted when the situations in which NCLT can make order for compulsory winding up. So now the same thing was given here. Just for your information, I'm reading. Sir, once the petition to NCLT and statement of affairs is just filed with the NCLT, then the NCLT may appoint a liquidator, right? The statement of affairs is ultimately prepared by the board of directors, which should need to be sent to the liquidator. All estimated realizable value of assets and liabilities which are represented by the statement of affairs. Once the liquidator is appointed by the NCLT, then board of directors will lose all their rights and duties, and shareholders are also known as contributories. Then after realization of assets and payment made to liability holders, liquidator will prepare the one final statement, which is summary of receipts and payments, which should ultimately need to submit to the NCLT or the court of law. Then court will pass a winding up order, and such winding up order will be sent to the ROC for the purpose of struck off of the company in the MCA database. Do you understand, all of you? Guys, any doubt till now? Any doubt? Sir, there are no further lecture on advanced account after today. What about the rest of the chapters? No, yeah, we have 2 more lectures. Yes, we have 2 more lectures. Apart from this, still I have 2 more lectures for liquidation of companies. Okay, I think so. You are seeing the wrong structure. So please look into the correct thing here. Okay. Yeah, clear, right? Till now. Guys, till now what I did, the conclusion part is very simple here. Right now the applicability of the liquidation is in the hands of 2 regulators. One is Insolvency and Bankruptcy Board as per Insolvency and Bankruptcy Code Rules 2016, and another one is in Companies Act 2013. So the major portion, that is the voluntary regulations, are due to the insolvency is within the purview of board only. Only the compulsory winding up due to order made by the NCLT is only within the purview of the Companies Act 2013. So now, if it is the case related to the Companies Act 2013, then to the NCLT petition along with statement of affairs, we should need to file Then if NCLT is satisfied, then it may order for appointment of liquidator. Then this statement of affairs hand over to the liquidator. Statement of affairs is ultimately prepared by board of directors and which represents the all estimated realizable value of assets and estimated realizable value of liabilities. Now with the help of the statement of affairs, he will identify the assets, he will identify the liabilities, and he also aware that what are the market values of such assets as well as liabilities. Based on such information, liquidator will start realizing the assets, make payment to the liability holders in the particular order. Once the entire liquidation process is over, he will prepare the liquidator final statement, which is a summary of gross assets as well as summary of liabilities he repaid till the date. Once the liquidator final statement is received by the court, then court may pass order for the winding up order. Such winding up order will ultimately send to the ROC for struck off. Is it okay, guys? Now come for the problematic issues. Guys, you can go for the break within 10 minutes. Please, all of you concentrate. What are the different problematic issues we are going to see in this chapter, sir? Preparation of statement of affairs. You know already who will prepare the statement of affairs. For which purpose they are preparing the statement of affairs. Ultimately, this statement of affairs hand over to which person you know. But how it is prepared, you don't know. You know, statement of affairs contains actual figures are estimated figures are. I already told you estimated figures. Who will prepare? Board of directors. To whom it should need to be sent? Liquidator. Do you understand? But what is the format? How we should need to prepare the statement of affairs? We are almost seeing at the end of the chapter. Not primarily, I'm not discussing primarily statement of affairs. We are going to discuss statement of affairs at the end of the chapter. Because I'm discussing the concept in the order of importance in examination point of view. Okay. Next, we are also dealing with liquidator final statement. Sir, who will prepare liquidator final statement? Liquidator. Ultimately, it should need to be sent to whom? Court of law for the purpose of passing the winding up order, which contains the actual receipts and payments, which is a summary of receipts and payments account. I already discussed something related to liquidator final statement. But what is the format, sir? In which order they are going to realize, in which order they should need to make payment to the different liability holders, we not yet discussed. So this is very much important concept. Maximum number of times they're asking question from the liquidator final statement only. In between, we are also going to discuss the concept of list B contributories. You know, at the time of liquidation, shareholders are known as contributories. But what is the difference between list A contributories and list B contributories? This is liability of list B contributories. That is the correct concept. We are discussing the liability of list B contributories. Okay, what is the significance of this concept? What is the difference between list A and list B? Why you are especially talking about liability of list B contributories also we are going to discuss. Next, two different sections we are going to discuss. One is section 326 of Companies Act 2013 and section 327 of Companies Act 2013. 327 is related to preferential creditors. 326 is related to overriding preferential payments. What is the difference between preferential creditors and overriding preferential payment? So why this concept is important? Such all issues we are going to discuss at that stage. Is it okay, guys? So regarding the importance wise, how we should need to deal. First, liquidator final statement, then 326 and 327, then liability of list B contributories, then statement of affairs. So this is the order for importance in examination point of view. Okay. Guys, let me know before proceeding with the problematic issues. Till now, any doubt? Let me check the query box quickly. Oh, clear, sir. March schedule is not yet updated. Okay. Then in March, up to 4th, we have classes here. Apart from this, 2 more lectures are there. The schedule is there. Next. Sir, statement of affairs equal to opening balance sheet. No, ma. Who told? Statement of affairs is not at all balance sheet. Balance sheet are the actual figures, are the book values. Statement of affairs is not the book values. To the estimated realizable values. Estimates. These are the estimates given by the board of directors. Maybe in my balance sheet, one of the land value may be 5 lakhs, but in the outside market, if I went, it may be the 5 CR as well. Do you understand? There is a difference between estimated values and the book values. Fine. Sir, is ISP dealt in final? Insolvency and bankruptcy board, something related, na? Related to financial reporting. insolvency and bankruptcy board, we not yet discussed anything, but in your law, there are other laws are there, right? So one of the law, they might discuss something about insolvency and bankruptcy board rules and regulations. And one thing, guys, in the new course means already ICA was in the practice of changing the entire curriculum. Just they are developing only the 6 papers, right? Totally for CA Inter, 3 papers in group 1, 3 papers in group 2. In that, liquidation of companies chapter was completely abolished, completely removed. Abolished means from the syllabus, just they are abolishing. Do you understand? So that's why for your exams and the November exams only, this liquidation of chapter is also applicable. For all our forthcoming, there is no applicability regarding the accounting point of view. So you might learn such all things in company law, but you may not adopt in accounting point of view. Okay. Where to email doubt occurring while solving sums? Guys, I already given an email. Na? Once again, so many persons just they are asking in the query box. In the last session also, again I am giving CA Satyaraju 2016. All of you follow the same email. If you have any doubt, you can ask anything. But don't expect the answer immediately because I'm seeing the mails 2 to 3 days once, especially regarding the queries. Okay, fine. Sir, in case of insolvency, compulsory liquidation is director's duty towards statement of affairs plus. Please explain. Yes, absolutely, ma. It is the responsibility of the directors to represent the statement of affairs. Otherwise, nobody knows. Because what is the objective behind the preparation of statement of affairs? Liquidator is altogether a new person to the company. He don't know anything about the company. First of all, someone should need to be guided. Someone should need to provide some guidance to the liquidator. Now, such guidance will be ultimately provided through statement of affairs. And that too, there will not be any direct communication in between the director and liquidator as well. Otherwise, there may be a chances of influencing the liquidator as well. That is the reason why at the time of filing the petition to the NCLC itself, Board of Directors should need to attach the statement of affairs. If Board of Directors will not attach the statement of affairs, NCLT will not go for the liquidation at all. So just they will directly ask that statement of affairs. Who will order? NCLT will make an order, and directors will definitely will produce, no doubt about it. Okay, fine. Email in notes. Yeah, guys, regarding the notes, my PDF, I will not provide in email. I will provide through our material corner itself at the last lecture. Okay, at the time of last lecture, I will totally upload the 3 PDF, which is related to amalgamation, internal reconstruction, as well as liquidation. Don't worry, I will take care of such things. Apart from that, do you have any subjectual doubts? Let me ask quickly before going for break. Fine. I hope there are no doubts at all. So please, all of you go for the break and come. We can refreshly start the issues related to the problems. I'm not directly go with the problems. First, to resolve the problems, we should require certain knowledge. Let us discuss that knowledge first, then we will go for the problems. Is it okay, guys? Please, all of you go for the problems. Please, all of you go for the break. Welcome back, guys. So yeah, we've seen what are the different problematic issues we are going to see in this chapter. But before entering into the problems, let me throw in some more light related to statement of affairs, because which create a base for understanding the remaining problematic issues. Here I'm not discussing anything related to format of the statement of affairs. One thing you should need to observe in statement of affairs, how the board of directors will classify the existing assets and liabilities. Just now here I am dealing in statement of affairs at the time of preparing, how board of directors will decide, or how the board of directors will present the assets and liabilities. Just I am discussing assets here, liabilities here. So liabilities and capital as well, that is capital. So based upon their nature, they are categorized into a particular list here. They are classified into a particular lists. For example, if coming to assets, assets are broadly categorized into two different lists, which are list A and list B. So what is the difference between list A and list B, or what are their names? Sir, list A is assets not specifically pledged. Simply I can call it as ANSP, assets not specifically pledged. So list B is ASP, assets specifically pledged. I'll tell you what is the meaning of assets not specifically pledged, what is the meaning of assets specifically pledged as well. Then coming to liabilities and capital. First, if it is liability, you can come here. Liabilities here I'm calling it as creditors, which includes all the liabilities, guys. Debentures, bank loan, everything. Just I am calling it as a creditors. That's it. Okay. The creditors I'm dividing into again two wings. That is secured creditors, unsecured creditors. Secured, unsecured. Creditors includes bank loan, debentures, and everything, whatnot. Not only the trade payables. Here, creditors is very broader meaning. Next, apart from the creditors or the liabilities, we are also having capital, right? So capital, you can divide it into preference and equity. Preference share capital, equity share capital. Now, unsecured creditors again divided into two types. Preferential creditors and other unsecured creditors. Secured creditors also you should need to classify into two different types. That is secured creditor with fixed charge, secured creditor with fixed charge. This is secured creditor with floating charge. Secured creditor with floating charge. Okay. So this is preference share capital and equity share capital. Now let me know, guys, all of you, the list numbers. This is list A, list B is over, right? Now secured creditors with fixed charge. Which list? Which list, guys? List B. You don't know, just I'm asking. Secured creditor with floating charge. Which list? You know, list D. Preferential creditors, which list you know? List C. Other unsecured creditors, list E. Preference share capital, list F. Equity share capital, list G. Now, I'll discuss about one by one. Please concentrate. Sir, coming to assets, whether it is current asset, whether it is non-current asset, there is no difference. Just I'm classify it into the assets not specifically pledged, assets specifically pledged. Sir, what is the meaning of asset not specifically pledged? Or first, let me provide the meaning of asset specifically pledged. Those assets which offered as a security to a respective liability, we can call it as a asset specifically pledged. For example, say a particular machinery was offered as a security at the time of availing the bank loan. Then that particular machinery was come under asset specifically pledged. Do you understand? Now, the machinery was come under list B, which is asset specifically pledged. Then the related loan, the related liability, which is treated as a security creditor with fixed charge. What is the meaning of security creditor with fixed charge? Those liabilities availed by the entity by offering a proper asset as a security and which is identifiable in nature. Then the liability is known as security creditor with fixed charge. That is the reason why the related assets we are treating under list B and the related liability also we are treating under list B. The machinery was coming under list B and the related bank loan is also coming under list B. Do you understand? Those assets which are free from charge are those assets which are not offered as any security at the time of availing any loans, which are coming under list A, assets not specifically pledged. Let us assume debtors is there. Debtors not offered as a security. Then debtors will coming under assets not specifically pledged. Stock not offered as a security. Then stock will coming under assets not specifically pledged. Like that, those assets which offered as a security at the time of availing any loan or the liability, then which are known as assets specifically pledged, then the respective loan or liability also we can call it as, we can also put it under list B in the name of security creditor with fixed charge. And those assets which are free from the charge, we can call it as assets not specifically pledged. Simply how you can remember, A category assets are free from charge. B category assets are chargeable assets. Okay, fine. Now come to the creditors. Sir, then after security creditors with fixed charge, you can give list C to security creditor with floating charge. Na? Why you are giving list D then? Why you are giving list C to preferential creditors? Even though preferential creditors are unsecured creditors. Sir, in Companies Act 2013, it is given privilege to certain unsecured creditors that even though those creditors are unsecured creditors, we should need to give a preference. Which type of preference? Before making payment to secured creditors with a floating charge, first you should need to make payment to preferential creditors. Then who are such preferential creditors are? What are all different persons covered in their preferential creditors? Such all things we are going to learn in section 327. We already seen in the problematic topic. One of the problematic topic is preferential creditor, which is section 327. Why it is given list C? Just for your remembering, C stand for charming persons. Just this example is not relevant. Just for your understanding, I am telling you. For example, there is a movie release. Okay, whether it is Hollywood or Bollywood, Tollywood, whatever the thing you can assume. Okay, then at the time of release of movie, what will happen? You know, there will be big crowd in front of the ticket counter. This is the ticket counter. Very big crowd is there. Then how the cinema hall people, they are distributing tickets to that crowd? That is based upon their line, based upon their sequence. Okay. So just first person they will give, after that second person they will give, like that they will distribute till the end of the tickets. Am I right? But suddenly certain group will come, you know, and they will directly ask the tickets from the ticket counter. That group is fans. So that particular hero fans are something. They are not stand on that particular line. They will directly come and they will directly collect the tickets and they will enjoy the show. Now fans will have that privilege. If you want to stop the fans, then you can simply know what will happen. Why they are having that much of privilege, whether the movie will be flop or whether the movie will be hit. They are only the people, simply they are completely see the movie, and they are the brand ambassadors that particular movie. Who will arrange the flexes? Who will make that milk abshekas and everything? Fans only. They are having that much of privilege. Even though those are the unsecured, they are not withstanding on the line. Still, the management of that particular theater giving the first preference over the secured creditors with floating charge. Such creditors are known as preferential creditors. But who are all covered under preferential creditors, sir? I will tell you at that moment. Just for the time being, you can hold. Okay, fine. Guys, just this is for understanding purpose only. Don't make it link up with the concept. Okay, next. Sir, after making preferential creditors, then you can go for making payment to secured creditors with a floating charge. Secured creditors with floating charge you can pay. That's why I was given it as list D. After that, other unsecured creditors, that is list E. Then you can make payment to preference shareholders, that is list F. Then equity shareholders, that is list G. So now, first, assets you should need to classify it into assets specifically pledged and assets not specifically pledged. Assets not specifically pledged list A, assets specifically pledged list B. At the moment of realization of assets specifically pledged itself, secured creditor with fixed charge will get the amount. Do you understand? Then after that, inline preferential creditors are there. After that, inline secured creditors with floating charge is there. After that, unsecured creditors are there, other unsecured creditors. Sir, whenever I'm talking about unsecured creditors, it is other than preferential creditor only. Then preference shareholder, then equity shareholder. This is the order of making settlement in the liquidation chapter. Now, this is, I already told you, only for knowing the lists I explained, but regarding the statement of affairs, nothing more explained. Now, let us discuss something related to liquidator final statement, guys. All of you, please, all of you come for liquidator final statement. So in the order of importance only, I'm talking. So the first and foremost concept, what we are dealing for our problems, which is liquidator final statement only. So regarding the statement of affairs, just we seen the trailer, we not yet enter into the real movie. We can enter into the movie in the last lecture. Okay, not for this session. Sir, liquidator final statement, as I already told you, which is a summary of assets as well as liabilities. Summary of assets and the liabilities, just we should need to show under the liquidator final statement. Now, I'll open the liquidator final statement through my PDF. Please, all of you come here. Hope it is visible. Now, under left hand side, just they represented the receipts. Under the right hand side, just they represented the payments. It is a simple receipts and payments account, but we may not call it as an account. The reason is, in a particular account, the payments were not making in the proper order. Just the payments were occurred in their chronological order. But here, how their payments were made as per the order decided by the liquidation provisions. So first, receipts. Sir, for the receipts, there is no particular order here. As per the convenience of the liquidator, just he will realize the assets. For example, if a property, plant and equipment is there, it will take more time while compared with the stock. So stock is a current asset, we can realize like anything. But for the purpose of selling the big plants, for the purpose of selling the big factory, for the purpose of selling the machinery, it will take a lot of time. They may go for the quotations, they may go for the advertising activities. Okay, after checking everything, they might sell. So that's why, based upon the real-time situation, just and as per their convenience, just they will realize the assets. But first, for presentation of liquidator, first we are representing ANSP, which is assets not specifically pledged. There is no liability involved at the time of realization of assets. That's why straight away you can show the value under the amount column. Then they may start realizing the assets specifically pledged. whenever they are realizing assets specifically pledged, for example, that particular building, that particular machinery, then the related liability first they should need to make it pay off. For example, machinery was offered as a security at the time of availing the bank loan. Then the secured creditor with fixed charge, you should need to reduce from that particular ASP. Then the remaining balance, which was surplus, after knock off with the secured creditors with fixed charge only, you can put it under the final amount column. Now, this much of cash is available with the liquidator. For the time being, just ignore this. For the time being, just ignore this. Now, this much of cash is available with the liquidator. Now, with that of cash, what liquidator will do? Sir, liquidator will make payment in this particular order, guys. Concentrate the order here. I am telling. First, he will incur legal charges. What is the meaning of legal charges, sir? Court fees. Okay. For initiation of the liquidation, any stamp duties, such all things he should need to incur. After legal charges, next, liquidation expenses. Sir, what is the meaning of liquidation expenses? Sir, liquidation expenses means actually what it means. For the purpose of realization, any advertisements, bidding expenses, okay, realization expenses, such all things we should need to incur. Then after that, liquidator remuneration. Liquidator remuneration. Sir, liquidator will not offer their services at free of cost. He is expecting certain remuneration. After liquidator remuneration, you should need to pay amount to preferential creditors. After that, you should need to make payment to secured creditors with a fixed charge. Secured creditors with a fixed floating, fixed charge already payment done. Secured creditors with a floating charge. After that, other unsecured creditors, simply unsecured creditors. Preferential creditors are also unsecured creditors, but these are other unsecured creditors. Next, preference shareholders. Finally, equity shareholders. Now, for the purpose of presentation, secured creditors with floating charge first you should need to present. For the purpose of presentation only. Even though for the order of making payment, you are making payment first to the preferential creditors, after that you are paying to the secured creditors with floating charge. But first, for the order of presentation, you should need to show secured creditors with floating charge first. The reason is very simple. Just liquidator want to make it present unsecured creditors at a single spot and secured creditors with floating charge at single spot. But for the order of making payment is first preferential creditors, then secured creditors with floating charge, then unsecured creditors, then preference shareholders, then equity shareholders. This is just for order of making presentation only. First, secured creditors with floating charge we are presenting only for presentation requirement. That is not order of payment. So that's why if you check things related to payments, legal charges, actually liquidation expenses, you should need to represent. I just to make it presented like that. Anyway, no issue. Liquidator remuneration, liquidation expenses, like that also you can make it present. But after legal charges, you should need to make payment for liquidation expenses. After that, liquidator remuneration. Basically, in the problems, we are not differentiating the legal charges and liquidation expenses. Both combined we are doing. That's why after legal charges, you can consider liquidation expenses only. Then liquidator remuneration, we will make payment. Then preferential creditors. Then preferential creditors. Then secured creditors with floating charge. Then unsecured creditors. Then preference shareholders. Then equity shareholders. But presentation, if you observe, first I presented secured creditors with floating charge. After that, I presented preferential creditors and unsecured creditors. Do you understand? It is just only for presentation. I already informed you. Is it okay? Now, let me explain one by one point, guys. Please, all of you concentrate. Lot of important issues here I am going to discuss. Sir, at the time of making payments in this particular order, for example, if at any point of time liquidator will not have sufficient cash balance to repay to the particular party, then what liquidator can do, sir? If any of the partly paid up shares are there, then liquidator may ask money from such partly paid up shareholders. Just In the bird's eye view, first I'm explaining, then in detail we'll discuss one by one point. Whenever liquidator having insufficient cash balance to repay payment among these various parties in that particular order, then liquidator can make a call from the partly paid up equity shares. Then whatever the cash he is realized from the partly paid up equity shareholders, he can repay that amount to the parties in that particular order. That possibility is there. Now let me discuss the issues one by one, guys. Please all of you concentrate. Lot of issues. I am asking questions as well. Okay. Sir, you are telling that from the asset specifically pledged, we should need to reduce the secured creditors with fixed charge. Now my question is, let us assume a particular machinery is there, sir. Particular machinery is there. In my books, book value is 10 lakhs. In my books, book value is 10 lakhs. And the related liability, let us assume bank loan is there, sir. Bank loan is there. Bank loan amount is for 12 lakhs, let us assume. Now, if I realize this machinery in the outside, I'm getting 13 lakhs. Market value I'm getting at the rate of 13 lakhs. Now, my question is, how much cash balance available after making payment of this secured creditors with fixed charge, which is secured creditor with fixed charge? My first question is this machinery is enough to cover the bank loan? Is this machinery is enough to cover the secured with creditor with fixed charge? This is ASP. This asset specifically pledged is enough to cover the secured creditor with fixed charge? That is my first question. No one is providing any answer here. Dhyanesh, sir, what is the purpose of segregation of stakeholders in the list? That may not be revealed in the trailer, yeah. I told you what is the significance of segregating in these many lists. We are seeing in the statement of affairs. Okay, fine. 1 lakh, that's correct. 1 lakh, sir. Here, what my point is, don't consider the book value. Don't consider the balance sheet figures. You should need to consider the market value or the realizable value is how much, which was 13 lakhs. Now we are realizing 13 lakhs from which you can able to repay the bank loan of 12 lakhs. You can repay the bank loan of 12 lakhs. Now the cash availability with the liquidator from assets specifically pledged was to the extent of 1 lakh. That 1 lakh only surplus available, he should need to add it to the final column, final amount column. Next, still my discussion was not yet over. Now let us assume the market value is not at 13 lakhs. In the second case, case number 2. Case number 2, the market value was at the rate of what you can call 10,50,000. Now the market value is at 10,50,000. What now? One of our student doubts are, can liquidator ask about the amount guaranteed by the members where company is limited by guarantee having share capital? Sir, company is limited by guarantee having share capital. That type of companies doesn't exist here. Either company limited by guarantee will be there, either company limited by share capital will be there. Company limited by guarantee and share capital both will not be there. Okay. If company limited by share capital, then the liquidator may call for to the extent of partly paid up the shares. In case of company limited by guarantee, to the extent of guarantee given by the particular person, they may ask, liquidator may ask from them. Okay, that is related to guarantee. Both combinedly will not be there. Okay, fine. Yeah, now let me continue, guys. Let me continue the discussion. Now my question is here, bank loan was 12 lakhs. There is secured creditors with a fixed charge. Market value of the asset specifically pledged is 10,50,000. Now, can I able to repay the entire bank loan? Not sufficient, right? Then what I should need to do, asset specifically pledged, nil. How it is nil? How I should need to take? Now ASP I should need to consider 10,50,000. From this you should need to reduce the bank loan which is secured creditor with a fixed charge. To the extent of 10,50,000 only you should need to reduce. Remaining outer you can put it as nil. Sir, then what about remaining 1,50,000 of the bank loan? What about remaining 1,50,000 of the bank loan? That 1,50,000 of bank loan you should need to treat it as unsecured creditor. To that extent of guarantee is available, to that extent of secured portion is available, you are treating as a secured with fixed charge. To that extent of unsecured portion, you should need to treat it as an unsecured creditor. For that 1,50,000, they should need to stand along with other unsecured creditors. That's it. So that's why at the time of presentation, ASP I will consider 10,50,000 and security creditor with fixed charge also I will consider 10,50,000. The balance available to the outer column is nil. For the remaining 1,50,000, I should need to consider along with the unsecured creditors. Hope you understand this point, all of you. Next, here at the time of presentation of liquidator final statement, book values are irrelevant. Always you should need to consider the realizable values or the market values which were given in the problem. Next, still the discussion is not yet over. Please concentrate. So the next issue, what I want to speak. Liquidator remuneration. Let me talk something related to liquidator remuneration. So liquidator in generally will get remuneration on percentage basis. Yes, they can go for lump sum basis as well, fixed amount as well. So in general, they can go for percentage basis, that is based on percentage of assets realized or percentage of payments made to particular parties. Payments made to particular parties. In any way, they can go for agreement with the company. So percentage of assets realized means, sir, on ANSP or ANSP plus ASP. So on both they can agree, or on a single group of assets they can agree. So as per the agreement, just they are work out the liquidator remuneration. For example, like this, it is given. Sir, 1% is the liquidator remuneration, which was payable on percentage of assets realized related to ANSP, assets not specifically pledged. Then assets not specifically pledged, we realized that at the rate of 10 lakhs. Then liquidator remuneration is how much? 10 lakhs into 1%. How much, guys? Quickly, all of you. That is 10,000. Liquidator also agreed that apart from 1% of assets realized on assets not specifically pledged, apart from that, they also agreed that 0.5% on payments made to shareholders or payment made to secured creditors with floating charge or payment made to preferential creditors. Like that, they may agree. Just here I'm given payment made to shareholders also 0.5%. Then you should need to check that how much payment is available to the shareholders, how much payment we are paying to the shareholders. On that, you should need to apply 0.5%. Then you will get liquidator remuneration. If you make it total, you will get the total liquidator remuneration. But my question is here, what my question is, cash availability with the liquidator. Cash availability with the liquidator is, let us assume 5 lakhs. Preference share capital is therefore 3 lakhs. Equity share capital is exist for 5 lakhs. And the liquidator remuneration is, or liquidator commission is 0.5% on payment made to shareholders. Now the question is calculate liquidator remuneration. All of you please start working, guys. Before proceeding the solution by me, please all of you work out. Cash availability with the liquidator is 5 lakhs. Preference share capital is 3 lakhs. Equity share capital is 5 lakhs and liquidator commission is 0.5% on payment made to shareholders. Then calculator liquidator remuneration. So just here I am providing 2 minutes time to all of you. All of you, please quickly work out, guys. Different answers are coming. 995, 4,000, 2,000, 2,500, 5,000. So many figures are coming here. Still very few members are participating. Always those guys who are participating regularly, such persons only participated again. Please, all of you participate. This is the opportunity available with you. Don't waste it. Okay, can I do? Oh, 2,50,000, 2,500. So many figures. Okay, let me check one by one. Sir, cash availability with the liquidator is 5 lakhs, right? No, first, in the order of payment, first he will make payment to preference shareholders. He can able to repay 3 lakhs. Yes. Whenever he start making payment to preference shareholders, liquidator will ask his remuneration as well. Then on such 3 lakhs, first you should need to work out 0.5%. 3 lakhs into 0.5%, which is how much? 3 lakh into 0.5%, which is 1,500. Fine. Now, after making payment of liquidator remuneration and the preference shareholders, how much cash available with the liquidator? Now, after that cash available with the liquidator is equal to 5 lakhs minus 3 lakhs minus 1,500, which is 5 lakhs minus 3 lakh, 1,500. I got 1,98,500 is the cash availability. Do you agree, all of you? Now, out of this 1,98,000, I should need to make two payments. One is liquidator remuneration related to equity shareholders payment. And I should need to make payment to the equity shareholders as well. Now, if I tell, sir, you can give the entire amount 1,98,500 to equity shareholders, on that you can calculate liquidator remuneration. If you tell like that, once if I make payment to the equity shareholders, there is no cash availability with the liquidator. Or if you want to pay the liquidator remuneration first you should need to know how much payment you should going to pay to the equity shareholders. Then the situation, how we should need to deal. Now, amount payable to equity shareholders, let us assume 100. Then the liquidator remuneration will be 0.5. If you add both the things, 100 plus 0.5, which is 100.5, which is equal to 1,98,500. For 100.5, which is 1,98,500, then per 0.5, how much? That is 0.5 into 1,98,500 divided by 100.5. How much we got for this figure? I got 988. In simple shortcut, which is 987.56, I got 988 is the approximate figure. So now, out of 1,98,500, if you pay 988 to the liquidator remuneration, then the remaining amount will goes to the equity shareholder, which is 1,98,500 minus 988, which is 1,97,512. Now I required only one thing. Total liquidator remuneration is how much? That is 1,500 plus 988. Total how much? 1,500 plus 988. Total will be 2,488. Is there any answer for 2,488? 2,488. Yes. Alok gave the correct answer. Dhyanesh, Piyush. Yeah, some members gave the correct answer. Now, whenever the cash availability with the liquidator is insufficient to repay to the party as well as liquidator remuneration, then always you should need to calculate the liquidator remuneration in this manner. Liquidator remuneration is equal to percentage of commission into cash availability with the liquidator divided by 100 plus percentage of commission. If you check the same formula we applied unknowingly, percentage of commission 0.5 percentage, cash available with the liquidator after making payment to preference shareholders and liquidator remuneration is 1,98,500 divided by 100 plus R percentage. So for that purpose, we consider the concept of liquidator remuneration. Hope you understand. Is it okay? Fine. Next. Guys, chapter liquidation of companies is a little bit dry, not only to you, to also me. I mean, dry means this is not that much of interesting topic as like amalgamation and internal reconstruction. Lot of theoretical issues are there, very less calculative part. Okay, lot more discussions should need to take care. That is the reason why it is look like little bit dry. But we can do much more interesting once the lecture is progress on. Okay, concentrate. The next issue is, yeah, this issue let me talk about. Sir, the liquidation cutoff date is, let us assume the liquidation started as on 1/4/2022. This is the liquidation start date. Okay. Now we have 10% debentures for the worth of 1 lakh. These debentures are secured creditor with floating charge. Let us assume these are offered. Sir, do you know the meaning or do you know the difference between fixed charge and floating charge? Fixed charge means it is offered as a security. Sorry. Security creditors with a fixed charge means so a particular asset is offered as a security and which is identifiable. Security creditors with floating charge means for that particular liability, group of assets were offered as a security and which are not in identifiable manner. I mean, sir, stock just we are given as a security, but which stock you are given, that was not identified. Just you given the buildings as a security, but which building you given? Like that, we are unable to identify in case of the floating charge. That is the only difference between fixed charge and floating charge. But anyway, both are secured liabilities only. Okay. Now come here. What my point is here, sir, interest on such 10% debentures was outstanding since last 6 months. Since last 6 months means from 30th September 2021 onwards, interest on debentures is outstanding. And during the process of liquidation, when such 10% debentures were actually settled, sir, in the order of making payment only, they are just settled down, right? That is first legal charges, then liquidation expenses, liquidator remuneration. Am I right? Then preferential, then security creditors with floating charge. Like that, they will come. So that's why as on date of settlement means almost it will come to as on 30th September 2022. This is the actual date of settlement. This is the date of initiation of the liquidation. So this is the liquidation initiation date. Now my question is, how much interest should need to be payable to the debenture holders? Is it up to the date of settlement? Is it up to the date of settlement? Or is it up to the date of liquidation, initiation? What is the total amount of interest? Let me know quickly, guys. Do you understand the question? Interest on debenture holders, to that extent how much it is payable by the liquidator to the debenture holders. Well, till the date of initiation of liquidation, till the date of settlement. And which is how much? I'm waiting for your answers. Up to the date of liquidation only. No need to pay up to the date of settlement. Debenture holders are exist for these 6 months also, guys. Don't ignore that. Debenture holders not only exist as on date of liquidation, they also exist as on date of settlement as well. They are expecting till the date of settlement. Yes, it's real. But how it will occur, I will tell you. Concentrate. First, how the liquidator will act at this point of situation. First, liquidator will pay up to the date of liquidation along with secured creditor with floating charge. I mean, simply the first 6 months debenture interest, they're also considered as a secured creditor with floating charge. 10% debentures is a secured creditors with floating charge. Then debenture interest up to the date of liquidation, also they are considered as a secured creditors with floating charge only. Sir, then what about the remaining 6 months interest? Sir, remaining 6 months interest, they are not considered as a secured creditors with floating charge. If the company is solvent, then liquidator will repay the remaining 6 months interest. That is from the date of liquidation to the date of actual settlement. So here 10% debentures into 1 lakh means that is 1 lakh into 5%, 5,000 for 6 months. First 5,000 he will treat it as a secured creditors with floating charge. Then for the remaining 5,000, if the company becomes solvent, then he will repay the remaining 5,000. When the liquidator will know whether the company became solvent or not, it should need to repay legal charges, liquidation expenses, liquidator remuneration, preferential creditor, secured creditors with floating charge, then unsecured creditors. After making payment of unsecured creditors, still liquidator end up certain cash. Then the company is said to be solvent. What is the meaning of solvency? The assets are sufficient to repay to the liability holders. Liability means who is the last liability holder? Unsecured creditors. After making payment to unsecured creditors, still certain cash balance available with the liquidator means company is solvent. Then before making payment to preference shareholders, first you should need make payment to the interest from date of liquidation to the date of settlement, which is 5,000. That point you should need to remember. Now come down. Just a second. Yeah, if you can read this. Secured creditors with floating charge, debenture holders, then what about interest on debentures? Interest outstanding up to the date of commencement of the liquidation should pay along with the debenture principal. Because if the debenture principal is secured creditors with floating charge, then interest up to the date of commencement of liquidation is also a secured creditors with floating charge. Interest after commencement of liquidation and up to the final settlement. If the company will solvent, then liquidator will pay after making payment to unsecured creditors. If the company is not solvent, then will not pay, then will not get any amount. But one thing, friends, for the purpose of presentation, now the debenture interest up to the date of liquidation, we should show at secured creditors with floating charge only. And from the date of liquidation to the date of settlement, also we are shown along with secured creditors with floating charge only. For presentation, I'm talking, not for the order of real payment. But for the real payment, after making payment to the unsecured creditors only, we will pay. I mean, here at the time of representing unsecured creditors with floating charge, first you will record here debenture principal. Then after you will record interest up to the date of liquidation. Then here itself you will record interest after date of liquidation and up to the date of settlement. Just for presentation, you are representing all at a single place. But this interest after the date of liquidation, you should need to pay after making payment to the unsecured creditors. That too, liquidator will have the positive cash balance. Do you understand, all of you? Fine. Okay. Next. So the next point of discussion is, still my discussion is not yet over. Just wait. Okay. Yeah. Let me discuss things related to dividend payable. Can you please tell me, guys, all of you, when I should need to pay the dividend? Is it after unsecured creditor, or along with preference shareholders, or along with equity shareholders? When I should need to pay? No one is providing any answer here. Which is dividend payable? Dividend already declared, but which is not yet received by the shareholder. Now, when I should need to pay such dividend? After unsecured, or along with preference shareholders, or along with equity shareholders, or along with unsecured creditors? When? Still, I am waiting for your answer. After equity shareholders, after unsecured creditors, preferential creditor. Oh, so many answers are coming. Tell me, as per schedule 3, dividend payable is a current liability or non-current liability? As per schedule 3, current liability. That means nowhere connection with preference share capital and equity share capital and dividend payable as per schedule 3. Tell me, yaar. Whether it is equity dividend or preference dividend, whatever the case may be, when I should need to pay? If it is related to dividend payable. So all are telling it after unsecured creditors only. Guys, if the dividend payable is related to preference, it is related to equity shareholders. If it is related to preference shareholders, the dividend should need to be payable after making payment to unsecured creditors, but before making payment to the preference share capital principal. If it is related to preference shareholders. If it is the dividend is related to equity shareholders, it should need to be payable after making payment of the preference shareholders. The reason is preference shareholders will have a preferential right. Now, amount payable to the equity shareholders is not only the principal amount, not only the face value, but also the dividend as well. So that's why which coming into the purview of amount payable to the equity shareholder. Do you understand? So that's why dividend related to the preference shareholders you may pay before making payment to unsecured creditors. Sorry, after making payment to unsecured creditors, but before making payment to preference share capital. That's fine. But dividend related to equity shareholders, the liquidator is going to pay after making payment to preference shareholders only, but before making payment to the equity shareholders principal, that is face value. Do you understand this point first of all? Next, I have one more doubt. Sir, what about arrears of cumulative preference dividend? What about arrears of cumulative preference dividend? Now we are in the process of liquidation, right? Tell the liquidator should need to pay definitely the arrears of cumulative preference dividend. That is my question. During the process of liquidation, that is completely depend upon provision in articles of association. If there is a clear-cut provision in articles of association that the company should need to pay the arrears of cumulative preference dividend at the time of liquidation, then liquidator should need to pay such arrears of preference dividend before making payment to the preference shareholders. Similarly, if there is no provision in articles of association, no need to pay. Just such persons will not get any arrears of cumulative preference dividend. This is all about dividend, guys. Okay, fine. It's now the conclusions related to dividend. If it is the normal dividend, then preference shareholders dividend you should need to payable before making payment to the preference share capital. If it is related to the equity shareholders dividend, before making payment to the equity shareholders principal. If it is arrears of cumulative preference dividend, if there is a provision in articles of association, it should be payable before making payment to preference shareholders. If there is no provision in articles of association, no need to pay any amount to the arrears of cumulative preference dividend by the liquidator. Hope it is understand. Next. What else? Still I should need to discuss something. Please concentrate. The discussion is not yet over. Liquidator final statement is actually a very big concept. Lot of issues are involved here. Now the issue is, sir, cash available with the liquidator is, let us assume, 3 lakhs. Okay. What you can call preference share capital. So total 1 lakh preference share holders are there into 5 rupees. Okay. 1 lakh into 5, how much? That is for 5 lakhs. Face value is 10 rupees. And equity share capital, we have 10,000 shareholders. Face value is also at 5. 10,000 into 5, 50,000. Here also face value at the rate of 10 rupees. Now my first question is, if the cash available with the liquidator is 3 lakhs, first to whom we should need to make pay? First to whom we should need to pay? Preference shareholders, right? Actually, how much amount we should need to payable to the preference shareholders? 5 lakhs. But cash available with the liquidator is how much? Only 3 lakhs. Then is it cash sufficient to repay to the preference shareholders? Please, all of you, let me know, guys. Is it cash available with the liquidator? Is it sufficient to repay amount to the preference shareholders? No. Whenever there is a cash crunch, then there is a chance of asking money by the liquidator from the uncalled shareholders, or I mean partly paid up shareholders. Now the question is, to repay amount to the preference shareholders, liquidator can ask money from equity shareholders. Liquidator can ask money from equity shareholders. Yes, sir. Preference shareholders will have one preferential right. What is that? Or two preferential right. At the time of declaration of the dividend, they will get. At the time of liquidation of the company also, they will get before making payment to equity shareholders. Now, if at all there is a situation of asking money from the shareholders, liquidator should need to ask money from first equity shareholder. After that, if any partly paid up preference shareholders are there, then liquidator will ask money from preference shareholder. That's why for making payment to the preference shareholder, liquidator can ask money from equity shareholders, sir. Yes, among the preference and equity, first liquidator from whom they can ask, sir, and from equity shareholders only. Preference shareholders, for getting the money, they are having preferential right. For giving, they are not having any preference. For getting only, they are only having the preference. That's why now the cash available with the liquidator is insufficient. That's why they will definitely ask money from the equity shareholders from the partly paid up shares. How much they can able to ask? From the remaining 5 rupees, that is 10,000 into 5 rupees, which is 50,000. Then the existing was 3 lakhs. Once they ask money from the equity shareholders, which is 50,000. Now the total availability with the liquidator is 3,50,000. Now this entire 3,50,000 they can is able to distribute among the preference shareholders. Each shareholder will get how much? That is 3,50,000 divided by 1 lakh shareholders. Each shareholders will get at the rate of 3.5 per share. Even though they contributed 5 rupees, they themselves get it 3.5 rupees per share. So to the extent of 1.5 per share is deficit. And for equity shareholders, how much amount is deficit? You know, for the entire amount of 50,000 is deficit. And that too, they should also need to contribute this 50,000 as well. What is the real loss to the equity shareholders, sir? This 50,000 plus 50,000. 50,000 already paid. 50,000 paid now to contribute for the preference shareholders. 50 plus 50 total 1 lakh is the loss in equity shareholders point of view. Then at that situation, how you should need to do? First, in the liquidator final statement, this is the liquidator final statement. First, the company will go for call. That is call money from equity shareholders. That is 10,000 equity shareholders at the rate of 5 rupees each. Then 10,000 into 5, 50,000. Then you can go for payment to the preference shareholders, which is 3,50,000. Then like this, liquidator final statement will come to an end. So that is the reason why in my PDF, call money from partly paid up shares was given. When liquidator will go for call if the existing cash balance is insufficient to make repayment among the parties, then only liquidator will go for call. Otherwise, liquidator will not go for call. Is it okay to all of you? Tell me, Gar. Is it understand? Can I go further? If you give green signal, then I will go. Is it clear till now? Getting it? Fine. Come back. Still, let me continue the discussion. What is that? Now the thing is, sir, I have 1 lakh equity shares. Face value 10 rupees. Paid up value 10 rupees. That is 1 lakh into 10, 10 lakhs. I have 50,000 equity shares. This is another class. Face value 10 rupees, but paid up value is 5 rupees. 50,000 into 5 means how much, guys? 50,000 into 5. Tell me, yaar. 2 lakh. 50,000 na? Next, I have 10,000 equity shares. Face value 10 rupees, but paid up value is 2 rupees. 10,000 into 2, 20,000. Let me give here the paid up value 6. I think so. For fraction, we will get the correct one. This is 3 lakhs. Change it to 3 lakhs. So now 3 different classes are there. For one class, fully paid up. For another class, partly paid up, which is 6 rupees. For the other class, only 2 rupees is the paid up. Now the point is, cash available with the liquidator is, cash available with the liquidator is cash available with the liquidator 5 lakhs. How this 5 lakhs is going to distribute among these many different class of equity shareholders is the matter of discussion. The cash available with the liquidator is 5 lakhs. How he should need to distribute this 5 lakhs among the various types of equity shareholders. This is the point. Now let me know, anyone, can you please resolve? Anyone, can you please resolve how this 5 lakhs they are going to distribute among 3 different types of class of shareholders? Can I distribute equally? Sir, 5 lakhs, 1 lakh plus 50,000 plus 10,000, 1 lakh 60,000. 5 lakhs divided by 1 lakh 60,000. Can I do that? 3.125 per share for each and every equity shareholder. That's wrong. You are distributing 10 rupees paid up value and 6 rupees paid up value, 2 rupees paid up value equally. That means even though if you contributed 2 rupees, you are sharing equally with the person who contributed for 10 rupees. Is that justifiable manner? Do you think? In proportion to face value? No. In proportion to face value means equal ratio, guys. Equal ratio means per share. I'm talking about per share. Okay. That's not correct. Sir, 80,000 will be asked from equity shareholders. Oh. First, then from 5 lakh 80,000, the 3 lakh to preference shareholder. Preference shareholders not there here. Here only equity shareholders are there. This is altogether different case. No. Based on paid up, in proportion to the paid up value. In proportion to the paid up value means, do you think that in the ratio of 10 lakhs is to 3 lakhs is to 20,000. Just we should need to distribute this 5 lakh. Do you think like that? Tell me, yeah. What is the ratio? If it is 10 lakhs to 3 lakhs is to 20,000 means this is 0.2 lakh. Lakh. Then 10 is to 3 is to 0.2 is the ratio. Do you think that this ratio, if you just distribute it, then it will be better? Do you think like that? No. That is also not correct. Sir, first call, then pay. Oh, someone is asking that, or someone is telling that, sir, here partly paid up equity shareholders are there, na? Then you can make a call, then you can distribute. How much I should need to make a call? We will call for the unpaid first, then all paid up will be equal. Oh, that's the great idea. If all the equity shareholders will have the same paid up value, then I can go for the equal distribution. I know that. I can equally distribute among all the equity shareholders. Then what we can do, we can go for a notional call. This is not a real call. If at all the liquidator will go for the call to make it equal all the paid up value same, then existing cash is 5 lakhs. If we can go for a notional call, add a notional call. This is not a real call, just we are checking. If I go for the notional call, then which is 50,000 into 4 plus 10,000 into 8, which is total how much? 2 lakh 80,000. If you add for this 5 lakhs 2 lakh 80,000, then total we get 7 lakh 80,000. Am I right? Then per each equity shareholder, how much it is getting? Total, we can distribute the 7 lakh 80,000 equally among all the equity shareholders. That is 1 lakh 50 plus 10, 1 lakh 60,000 divided by 1 lakh 60,000. Per share, how much? 7 lakh 80,000 divided by 1 lakh 60,000. That is 4.875 per share. Now total 3 classes are there, right? Please all of you concentrate. Class 1, class 2, class 3. Just I'm identifying. Now here the paid up value is 10 rupees. Here the paid up value is 6 rupees. Here the paid up value is 2 rupees. Now what is the call I made? Notional call. From him, nil. Notional call nil. From class 2, call 4 rupees per share. From class 3, I made a call 8 rupees per share. In return, how I am giving? This is not a call. We are distribution. So distribution, how we are giving? 4.875, 4.875, 4.875. We are not asking anything from the class 1. We are giving the 4.875 per share. So just this is only the net distribution. Now here we are asking 4 rupees from the call. In return, again we are giving 4.875. Rather than asking and giving, it is better to distribute 0.875 per share. Net distribute. Don't ask 4 rupees and again don't give 4.875. Just give 8.875. Now here you are asking 8 rupees. Again you are giving 4.875. Rather than, it is better to ask only 8 minus 4.875, which is 3.125. This is only call. Now what will happen really, how the settlement? I will tell you, please concentrate. Before making call, what is the cash availability with the liquidator? Which was 5 lakhs. Then liquidator will go for the call. How much per share call? 3.125. So 3.125 multiplied with, for class 3, how many number of shareholders are there? 10,000. So 10,000 into 3.125. He got 31,250. Now cash availability with the liquidator is 5,31,250, from which he should need to make it pay to first class, that is class A shareholders. 4.875 per share, na? 4.875 into 1 lakh. That is 4,87,500. Next, second class, that is class B. 0.875 into 50,000, which is 43,750. Then cash availability with the liquidator is nil. Can cross verify. Like this, the liquidator is going to distribute. Tell me, guys, is it clear? Is it clear to all of you how they are going to distribute among the various classes of shareholders? Hope you understand. So the same thing we can also able to do in another method. Actually, this is logical method, but in the ICA material, sometimes in the problems they followed this, but while explaining the concept, they are following the different method. This is most logical method and most agreeable method. So the method which I am right now, or what I'm going to tell is procedural method. I will tell you the procedural method as well for your convenience. Which method is convenient to you? That method you can follow in the exams. What is that? You can start with 3 different classes of shareholders: class A, class B, class C. May I know the total face value of equity shares? So face value first, 1 lakh into 10, which is 10 lakhs. Class B, 50,000 into 10, which is 5 lakhs. Class C, 10,000 into 10, which is 1 lakh. What is this? This is the face value. If you want, you can put the number of equity shares as well. Number of equity shares, 1 lakh, 50,000, and what is that? 10,000. Face value 10 rupees. That's why 10 lakh, 5 lakh, 10,000. What is the paid up value? Here the paid up value at the rate of 10. Here it is at the rate of 6. Here it is at the rate of 2. So 1 lakh into 10, 10 lakhs is the paid up value. 50,000 into 6, 3 lakh is the paid up value. 10,000 into 2, 20,000 is the paid up value. Now may I know the totals as well, guys. Total face value is 16 lakhs and total paid up value is 13 plus 20, which is 13 lakh 20,000. Now all of you please listen carefully, guys. Here, what is the cash available with the liquidator? Cash available with the liquidator is, I know, 5 lakhs. Cash available with the liquidator is 5 lakhs. Actually, if the sufficient cash is available with the liquidator, actually, what is the amount I should need to repay to the equity shareholders? Total 13 lakh 20,000. To that extent of paid up value, I should need to pay at least, right? If shareholders should not end up with the deficit, at least liquidator should need to repay 13 lakh 20,000. If you paid more than that, then the equity shareholders are double happy. They are end up with the surplus. Now my question is, if with me I have 5 lakhs, but the total payable is 13 lakh 20,000, then the deficit is how much? Deficit. Total deficit is how much? May I know? 13 lakh 20 minus 5 lakh. So deficit is 8 lakh 20,000. This deficit of 8 lakh 20,000, we should need to distribute among the different classes of shareholders in the face value ratio. First, whatever the thing I am telling, just made it. In the face value ratio means, that is, what is the face value ratio? 10 is to 5 is to 1 na? Tell me here, 10 lakhs, 5 lakhs, 1 lakh means 10 is to 5 is to 1 ratio. Now, please all of you make it distribute among A, B, C. That is 8 lakh 20,000 into 10 by 16. Here I got 5 lakh 12,500. Okay. For here I got 8 lakh 20,000 into 5 by 16. 2 lakh 56,250. Next for C, 8 lakh 20,000 divided by 16. 51,250. And the total deficit is 8 lakh 20,000. Okay. Then may I know for class A shareholders how much they are getting? 10 lakhs minus 5 lakh 12,500. They are getting 4 lakh 87,500. For class B, 3 lakh minus 2 lakh 56,250. 43,750 they are getting. For class C, 20,000 minus 51,250. Negative 31,250. What is the meaning of this, sir? Class C shareholder should need to contribute 31,250. Here the same thing was made in the old method. Then Class A shareholders will get 4,87,500. Yes, Class A shareholders will get 4,87,500. And Class B shareholders will get 43,750. Yes, Class B shareholders will get 43,750. That means whether you followed the method number 1, which is the logical method, or whether you are following the method number 2, which is the procedural method, the conclusions are same. Do you understand, all of you? Let me know, guys. Is it the methods what you followed, whether it's method number 1 or method number 2, we got the same solution or different solution? Same solution only. Will you agree? Sir, which method is feasible to you? That method you can follow it, guys. No objection for me, because both the methods are accepted as per the ICA material. Next. Yeah, till I'm not entering into the material, I'm not yet entering into the problems. Just let me discuss some more issues. Okay. Yeah, which method is easy? That method you can follow. Yeah, no objection. The next thing. Sir, let me continue the same situation. The situation is I have 1 lakh equity shares at the rate of 10 rupees each face value. So paid up value, face value is 10 rupees. Just a second. 10 rupees face value at the rate of 10 rupees paid up value, which will be the 10 lakh. And the other one is 50,000 equity shares. Okay. Now 5 rupees face value. Paid up value or not 5 rupees face value. I'm so sorry. Of face value, let us take 100 rupees. So paid up value is at the rate of what you can call 50 rupees. Okay. 50,000 into 50, how much? 25 lakhs we have, right? Here it is 25 lakhs. Next, you can take up another class of shares, which were 10,000 equity shares. So here the face value is, you can consider 50 at the rate of 20 paid up. At the rate of 20 paid up. Now 10,000 into 20, which is 2 lakhs. Now the thing is, face value is different, paid up value also different. Earlier, you check that here, face value is same, but the paid up values are different. Now, the cash available with the liquidator, is, let us consider 10 lakhs. This is the cash availability with the liquidator. Now the point is how I should need to distribute this 10 lakh of cash among these equity shareholders. Now this is the question. Please let me throw in some light, guys, here. Now the face value is different. Anyway, once the face value is different, paid up value per share is automatically different. Now what I should need to do? If I need to apply the above procedure, first the face value should need to be equal. But here the face values are unequal. Then what I should need to do? What you should need to do, you should need to apply the equivalent number of units concept. Equivalent number of units means, sir, you can convert all the equity shares as 100 rupees face value, or else all the equity shares as 10 rupees face value, or else all the equity shares as 50 rupees face value. As per your wish. As per your wish, there is no objection. For example, if you want straight away convert all equity shares into 100 rupees face value, let us assume, just you want to make it convert into all the equity shares into 100 rupees face value. Then how many number of shares it will be? 1 lakh equity shares will become 1 lakh divided by 10. 1 lakh divided by 10 means which will be 10,000 equity shares. That is 10,000 equity shares. Now the face value is 100. Now 10,000 into 100 at the rate of, again, paid up value also will become 100. It will be 10 lakhs only. There is no change. So now this is no change for 50,000 equity shares. Face value is 100. Paid up value is 50. That is, there is no change, which is for 25 lakhs. Now for the last one, if you want to make it convert 50 rupees face value into 100 rupees face value, then what you should need to do, you should need to divide with 2 here. Here you should need to multiply, then it will become 100. You should need to divide here 2, which is 5,000 equity shares. Face value 100, paid up value 40. Correct? Paid up value 40. 5,000 into 40, 2 lakhs. Sir, why I'm doing this? Yeah, guys, you can go for splitting or you can go for consolidation. There is no problem, but you should need to apply the equivalent units concept. Anything is fine for me. Now, if I check, the face value will become same. Now I can apply the old procedure. What is the old procedure? Now, total 3 classes, class A, class B, class C. So you can start with the face value of the shares. Face value of the shares, 10,000 into 100, 10 lakh. 50,000 into 100. How much, guys? 50,000 into 100. 50 lakh. 5,000 into 100. 5 lakh. Right? This is about face value. Total face value, how much? 10 plus 50, 60, 60 plus 5, 65 lakhs, which is the total face value. Now you can come with paid up value. Paid up value 10 lakhs, 25 lakhs, and 2 lakhs. So total paid up value 25 plus 10, 35 plus 2, 37 lakhs. Am I right, guys? Are you following? So total 10 plus 25, 35 plus 2, 37 I should need to pay. But I have with me only 10 lakhs. Deficit is how much? Deficit is 27 lakhs. So deficit of 27 lakhs. Deficit of rupees 27 lakhs. We should need to distribute in face value ratio. What is the face value ratio? 10 lakhs is to 50 lakhs is to 5 lakh. Lakh cancel. 5 2s are 5 10s are 5 1s are. 2 is to 10 is to 1 is the ratio. That is 13. Now the deficit 27 lakhs. 27 lakhs into 2 by 13. Guys, these are important problems. Don't feel that this is unimportant. Last time they already tested for 5 marks for distribution of cash. Since from the past 4 exams, twice they tested the similar model. I mean the face value might be different, or they are asking in different manner. Just for the distribution related problems, twice they asked for 5 marks. Okay. Don't be take it as easy. Now, how much, guys? 27 lakhs into 2 by 13. 4 lakh 15,385. Is it right? Can I proceed? Next, the other thing is 27 lakh into 10 by 13. Here I got 20 lakh 76,923. The final one is 27 lakh divided by 13, which I got 2,07,692 here. Now you can check here. 10 lakhs minus 4,15,385. I got 5,84,615. Here from 25 lakh minus 20 lakh 76,923. 4,23,077 for Class B. Class C, they should need to contribute 7,692, which is negative. So what is the meaning of this, sir? Class K shareholder, per each and every share, how much they will get, you know? Number of shares you can divide with 1 lakh only. Just for equivalent number of units concept, just we applied to apply the procedure. 1,50,000 and 10,000 only you should need to check. For each and every shareholder here, you will get divided by 1 lakh. If you make it, then they will get 5.84615 per share. For Class B shareholders, 50,000 shares are there. If you make it divided by 50,000, then they will get 423,077 divided by 50,000. They will get 8.46154 per share. For Class C shareholder, they should need to contribute 7692. So 7692 divided by 10,000. They should need to contribute how much? 0.7692 per share. They should need to contribute. For the existing 10 lakh, if they contribute 7,692, then you can distribute for A class 584,615, for B class 423,077. That's it. Is it okay, guys? Did you understand? Now, till now, we discussed various issues related to the liquidator final statement, but still we not yet seen the final liquidator final statement related problem. Okay. First, in the next class, what we will do in the initial session, we will try to close the small problems which based on all these issues. Once the problems based on these issues is over, then we will look into the problems based on liquidator final statement. Once the liquidator final statement is over, then I will discuss the concept of section 326 and section 327, followed by list B contributories, followed by the statement of affairs. Okay. Hope that today's lecture you enjoyed and it is in understandable manner. Bye-bye. See you. We'll meet in the next class.